Sunday afternoon, 22 degrees out there. It's looking as good as any summer Sunday ever did. I'm Ian Grant, and thank you for joining us here on Ask the Expert. And today, Cannect Home Financing, a real pioneer in the mortgage industry since its early days of his career. Founder and CEO of Cannect, Marcus Zafaris, is joining me this hour. Nearly 20 years of experience in the mortgage industry, additional experience in development and investment, and joining him with a decade in customer service and sales in various fields. Principal broker of Cannect, Justin Turner, is joining us. Justin managing a team of account managers to provide the industry-leading customer service that Cannect is known for. Gentlemen, good afternoon. Welcome in, and thank you for joining me.
Hey, thanks for having us.
How's it going?
Can you guys right off the top explain to the listener the difference between using a bank and using a brokerage? What are the benefits?
For sure. I think first and foremost, when you're dealing with a broker, you get an unbiased viewpoint as to what you should be doing. Going to a bank to assess what you need for a mortgage, you're typically just going to find out what options that bank has for you. And the Canadian marketplace is just becoming so robust with options for the consumer. You know, it's not just the main Canadian banks that have offerings. It is, hundreds of lenders with varying products. I mean, most Canadians don't know that there's a difference between how you qualify for a mortgage between a credit union and a bank. So to limit yourself with one option is like saying, we're going to furnish our house and the guy from Leon's is going to tell us what goes in every room.
Marcus, it's interesting because just before doing the show, obviously, I read up a bit on you guys, and you're quoted in a couple of articles. The Toronto Star one comes to mind, where you really are. I mean, your frustration with the banks is almost palpable at the amount of interest that they are charging people, and unfortunately, people out there are paying it with very little idea or concept that there is another option, or worse, that they can't be bothered just looking around to see if they're paying far too much.
You know what? That's a good point. So I actually know the exact article you're referring to because I got a lot of flack for it. When the coronavirus first hit, when we were first battling a pandemic, we saw variable rate mortgages in Canada go from prime -1 to prime +1. And this is a trick that was only employed once before in 2008, 2009, when we had that brief financial crisis. But what it was an attempt to increase margins on mortgages. And when any banker or mortgage broker or economist, unfortunately, was asked about it, they were told that this was something that was necessary. This was something that was due to risk. This was something that was due to the inner workings of the bank. Like these kind of nebulous answers that really don't provide any clarity as to why something's happening, when in actual fact, what was happening was profit taking. So I know the article you're talking about. Listen, we need the banks. And we need our banks to be profitable, and we need them to be stable. But we don't need that at the complete expense of the Canadian consumer.
Guys, there's a couple of different shows that I've done over the years, one being financial, the other being legal, all kinds of lawyers and stuff, where I've learned that people are very, very reluctant to second guess the advice they're getting from either one of these areas. Like they'll choose an advisor, they'll choose a bank, they will choose a mortgage, and whatever they say goes because, I don't know, I guess that's his area. And that can literally, it's amazing when you start adding up the costs that throwing your arms in the air can cost tens, hundreds, thousands of dollars a month. It adds up so quickly.
Yeah. Listen, we couldn't agree with you more. One clear example of that is mortgage penalties, right? You've got Canadian consumers right now is the perfect time to break your mortgage. You get Canadian consumers going into their banks and asking them what it might cost to break their mortgage, and they're not even being properly advised as to how to break the mortgage, let alone what the accurate penalty of their mortgage is. So the quick lesson on this one would be, if you are out there in the market looking to break your mortgage, understand that the number one source of information for how to break your mortgage simply isn't your bank.
It's so true. Since you started Connect, I'm guessing that probably from your very first meeting, customer service more than anything else kept coming up over and over again, because it's certainly the one thing that you're recognized for.
Yeah, listen, we've built a business on one tagline: sound, unbiased mortgage advice. So the entire way that the business is structured is to ensure that we're always providing really good advice and that it's unbiased. And just by doing that, we've been able to grow exponentially over these past years. Just by being that voice that when someone calls us and it's not time or it's not profitable to break a mortgage or something doesn't make sense, to hear it from someone in an unbiased way is kind of the talisman of the business, right? And then everything else really falls into place. Like if we've got an amazing group of people that are salaried employees that make no more or less by doing a mortgage or not doing a mortgage with any person that comes in. Just by setting, kind of certain ground rules and by bringing in the right team of people that really kind of care and want to look out for our borrowers or our prospective borrowers or investors, it sets you on the right path.
Speaking of the right path, you and I can wax eloquent about how great the company is. If there's one thing we can't do, it's control the internet. And, the internet is renowned for people with their negative comments. People just need to check your Google rating to show that you're doing something right. The positive comments on there, it's obviously feeding back to you guys, and you must feed off that as well, knowing that, yes, it's about the money, but it's also about the people involved with the money.
Yeah, 100%. I mean, we pride ourselves on how happy and how engaged our borrowers are. Like, as much as we can get out there and talk about how great we are on radio shows or commercials or on TV, nothing ever will parallel having happy and successful borrowers talk to their friends and family members about how they've been helped or advised by us.
And it illustrates how the business has changed over the past couple of decades. And as I started talking about, you've both been involved in it, 10, 20 years, whatever, whereby now, the person out there, the consumer has a voice, and that voice can be really loud. And if they're not happy, man, companies certainly know about it really, really fast. And by the same count, when it's a good sign, when it's something, you look up the reviews, people sit down and they'll put in the company name and do the reviews. When it's positive, that's gold.
Yeah, I couldn't agree with you more. Listen, we really take each interaction with each borrower so seriously. I know, like, Justin leads a team of our agents that are on the phones every day, and the number one mandate is to make sure that people are walking away and not feeling like they're being pressured into something, right? Like, there's so much information out there right now. Banks are just, spewing out information. There's so many brokers. There's in the middle of buying a house would be a really kind of a key time to look at, right? Like, everybody knows someone that's in the middle of buying a house at one time or another because they're telling everybody about it. They're out there trying to receive information about who should I use for a lawyer? Who should I use for a mortgage broker? Our goal is just to be a clear message somewhere that they can, again, where they can get sound, unbiased advice on their mortgage without worrying about double talk or, who has a vested interest in this.
And it's interesting because on your website, cannect.ca, cannect.ca, I mean, you chart it out. You chart, the benefits of dealing with Connect versus, the banks versus the brokers. It's right there for people to see the benefits of going to your website. And again, I'm hitting it back again, and we'll talk about it, I think, when we come back after the break, that, it's not just about helping Canadians borrow for less. It's also about making them feel good about it, about making making them feel confident about their decision. And, you and I were talking earlier this week, all of us were, and I was mentioning, there are people who up to a year ago had perfect credit. They never missed a payment. There was never one thing wrong that they could be criticized on, and then the rug got pulled out from under them through no fault of their own, and now they're trying to build back up again, and they're trying to stand back up again, and what they need are people, they need to feel that company's arms on their shoulders helping them move forward, as opposed to someone, tut-tutting as they're trying to talk about their situation.
Ian, you're so right. What we're seeing right now is this influx of calls from borrowers who are trying to get back on their feet, and they haven't really been helped in the last 12 months. Let's say they've worked for a restaurant or a hotel, or they've been somehow involved in the service industry. Their income's been displaced. They're on CERB, and they're trying to figure things out. In that time period, if they've got a mortgage, they can no longer qualify for the mortgage they have, let alone an attempt to refinance that mortgage. Federal government's bringing in plans to increase the interest rate that a Canadian consumer needs to qualify for their mortgage at, which again has different macroeconomic reasoning, which the Bank of Canada is probably championing, and many in Canada are. But in an attempt to help the people that have been most displaced by what's going on right now, what Cannect aims to do is, again, focus on the unbiased advice, but to give them the capital that they need to repair their credit.
Tell you what, I want to jump in. We'll take a break and we will continue this conversation. Lines are open for your calls, by the way. Your questions, comments, give us a shout now. 416-872-1010. 416-872-1010. You can also send us a text message at 71010. This is your chance to get your questions answered about using a brokerage, about financing, all that kind of stuff. Get approved for a home equity loan in 60 seconds. You can secure a low interest rate loan by tomorrow. When the banks won't help you, Cannect will, as we've been discussing. For more information, visit cannect.ca. That's Cannect.ca. Connect with an A, or you can give them a call, 647-404-5666. This is Ask the Expert right here in Newstalk 1010 on this Sunday afternoon. It's beautiful out there. 22 degrees. Thank you for joining us on Ask the Expert this hour. Cannect Home Financing and providing the industry's leading direction, customer service that Cannect is known for. My guest this hour, founder and CEO of Cannect, Marcus Averis, and principal broker Justin Turner. Justin, I have to imagine, because I've been in that situation, not necessarily recently, but boy, do I remember how it felt, where you don't know what to do. You're in a situation, and I brought it up during the last segment, where there's a lot of people. You know what? There's professional people out there that are not worried. They go into debt, they come out of debt, they go into debt, they go out of debt. There's people out there, though, who last March starting last February and March, all of a sudden watched everything they knew about their life change, watched their perfect credit rating slowly but surely fiddle away, because through no control of their own, the money stopped and the bills didn't. I'm curious. There's people out there lying there at 2 o'clock in the morning, wide-eyed, not sleeping, having all kinds of social effects on their family because of it, that maybe if they would just pick up the phone and give you guys a call, and I'm hoping these are the kind of calls that you would get, where they're not in nearly as much trouble as they believe they are.
Yeah, I mean, this is what we've been dealing with a lot more lately. Canadian borrowers are in a different place than where they were before, and things have really changed for them, and it's very common for us to get these kind of borrowers calling in right now. There is an answer. That's what we're here for, and I would say just give us a call. And
more often than not, the same problems that were created by the pandemic, there's also a bit of a silver lining. Mm-hmm. So if they've got a home, they've seen the home's value appreciate. So they've got a little more equity. And that equity is like the juice that they need to solve the problems. So when they clam up, like, I mean, listen, it's really common, right? Like you have a problem going on in your life, whatever it is, debt included, you clam up, right? Like initial response is like, I'm not going to deal with this. But the moment you start dealing with it, especially in a situation like this, you pick the right partner to work with, that equity solves the debt problem. What we do at Cannect is we figure out, number one, whether it is solvable. Like, does it make sense to spend the rest of your equity to eliminate your debt and reduce the overall borrowing costs across all of your borrowing, and then move forward, right? This is all predicated upon a time horizon. So if we believe we're getting out of the pandemic, which we do, and you believe you're going to get back into work, which you do, there is no reason why you got to continue paying 20% on credit cards month over month through this thing. And know that you're not alone. Like there's a lot of people out there that are worried about their debt, that aren't sure what to do. And there's also people that can help. And Cannect is, listen, I think we're built to be the absolute best at it, but we're not the only ones out there. You can get help. There are others, but like our whole goal is unbiased advice to the Canadian borrower. How can we get the borrower to lower cost capital? And whatever we need to do to get them there, we're going to do it, right? We've got our own investment fund. We use our investment fund to help those borrowers. That's why, like, you know, you see it on our website. You've mentioned it already, Ian. Thank you. But we can get money into Canadian consumers within 24 hours. If it makes sense, we'll get the money to you within 24 hours. And this is just one part of the journey, right? It's one step to getting you back to the, you know, we're seeing mortgage rates right now at 99 basis points, right? Less than 1%. And every single person that's listening to this show right now should know that they can get that rate. They might not be able to get it right now, but what Cannect is going to do is we're going to give you the capital that you need, the advice that you need. We're talking about 20 years and, you know, probably, I don't know, $10 billion worth of mortgages, tens and tens of thousands of borrowers. All we're doing all day long is getting borrowers back into the lowest cost capital. And
talk about what you just mentioned about not having to go through a middleman, because for Cannect, that really does make a huge difference in not only who you can qualify, but how you can qualify and how quickly you can qualify.
Yeah. So very early on, we created a mortgage investment fund, and we use capital that really belongs to our first borrowers, right? Like the people that we first got to know as we started this business, and we pooled capital together, and that capital we use to fix credit, to bridge people who are out of work, who are sick, who are pregnant, who are like insert whatever reason you want. Life happens. So Cannect is able to move really, really quickly to stabilize a situation. And then our agents work with whoever borrows money from us to, once that situation is stabilized, to get them back into the lower cost capital that you need. Listen, people can't pay 10% interest, 8% interest forever. People can pay it as a means to an end. You can pay it to fix something. So I would say the number one difference between Cannect and most of the other players in this space is we're looking to bridge people. We're really looking to give them the capital that they need for a short period of time, not an extended period of time. And we're always looking for that end goal, that end solution. You mentioned how great our reviews were. You know, it's simple. You want to know why our reviews are so great? If you're providing people capital and a solution to lower cost capital, they're going to write something nice.
That's a great point. Because the natural reaction, the logical natural reaction from someone, if you were helping them out and they weren't being helped and they were just getting more and more frustrated, would be to lash out as opposed to compliment. 416-872-1010. 416-872-1010. You got a call, a question? We can take it. Kenny is in Toronto. Good afternoon, Kenny. What's your question?
Hey, thanks for taking my call. So I'm not really looking for mortgage advice, more interested in that investor side of things that you're just talking about right now. To me, stock market looks really frothy right now. Inflation looks like it's ready to explode. And to be quite honest, I'm ready to shift out of equity, something less risky. So at the bank, they're trying to get me into GICs, which are like less than 2%, which to me looks like just burning my money up. And I was looking on your website, and it says you're averaging 7.99% of returns.
Wow.
Can you explain how you're offering those returns and kind of risk I'm getting into if I'm investing?
Yeah, sure. Thanks for the call, Kenny. So first off, I'll tell you that there's a lot of mortgage investment funds in the Canadian marketplace. What differentiates Cannect is that in the same way that we're direct to the borrower, we're direct to the investor. So when you deal with us, we are obviously governed by Financial Services Commission and the OSC, and we have what's called an exempt market dealer that monitors all the investors that come in. But we don't pay anyone to generate our invested capital. We don't pay investment advisors to bring us money, which is really, really customary in this field. You're probably going to get some people upset with the way we're talking about this. But so right off the bat, it is standard in this industry that if you want capital to deploy, you're going to have to pay between 3 and 7% to get it. And you pay an investment advisor, you pay a bank, you pay someone to get that capital in. We took the slow approach. We just talk about what we do, and good people come to us and they, deploy capital with us. So once we get that capital, we move the capital into our mortgage fund. And in the same way that we speak directly to our investor, we speak directly to our borrower. So again, we don't use brokers to originate the mortgages that we originate. We originate them all in-house. So we're able to take the capital we get from investors and deploy it directly to our borrowers and return an interest rate of 8%. Historically, it's 7.99 over the last 10 or so years. But the reason why that is so easy for us is because the only cost in that chain, in that vertical integration from the borrower to the lender is a 2% management fee. So we need to target a 10% rate of return. And what that allows us to do, what you allow us to do as the investor by trusting us with that capital, is by going out and finding a borrower who sits somewhere in between the home equity loans of 12 to 18%, which will just cause someone to kind of spiral out of control, really, in debt, and someone that is just marginally displaced by a stress test or a job loss. So you're allowing us, you're arming us with the tool that we need to go into the marketplace and search for the exact borrower we need to help. The exact borrower we know we can get back to lower cost capital. The exact borrower we know is going to give us those 5-star Google reviews that
Guys, I need to jump in. My guest this hour, founder and CEO of Cannect, Marcus Zafiris, is joining me as well as principal broker, Justin Turner. Lines are open for your calls, questions, comments, 416-872-1010. You can also send us a text message at 71010. It says it right on the website. Get approved for a home equity loan in 60 seconds. You can secure a low interest rate loan by tomorrow. When the banks won't help you, Cannect will. For more information, visit Cannect.ca. That's Cannect.ca. Connect with an A, or call them at 416-766-2666. You're listening to Ask the Expert here on Newstalk 1010 on a bootable Sunday afternoon, 22 degrees in Toronto. I'll take it. Joining me this hour, founder and CEO of Cannect, Marcus Zafiris, and principal broker, Justin Turner, are here. Guys, there's an interesting quote on your website I want to make sure that I pass along because I think it's important. It's under the Why Go with Connect section. It says, in short, because we are offering the best rates in town with lower fees, that's fine, and actually help help you transition into lower post debt when the time is right. That is such a key point, as opposed to, how long do I pay? I don't know, keep paying it. We'll tell you when to stop. You're actually watching this progress and adjusting accordingly.
It's one of our most favorite value propositions. It's motivational alignment. So if you think of it like this, you've got a borrower who is, let's say their credit's been messed up and they've maxed out a bunch of stuff. They need capital. Cannect has the capital. We've got investors that are ready to deploy that capital. Our investors want to make sure they're going to get their money back. And our borrowers want to make sure that they're not borrowing that money for an extended period of time. So by creating a motivational alignment of a borrower who is provided with a solution, not just an amount of capital, but a real solution of, this is the capital you're going to get, this is how you're going to use it, and this is how we're going to migrate you to lower cost capital, that borrower is motivated by the exact same thing that the investor is motivated by. I'm going to get the capital that I need. I'm going to use it. I'm going to pay the interest on it. And I'm going to give it back. The investor, our investor especially, is typically a far more risk-averse investor. It's an investor, listen, we're not trying to shoot for the lights with Cannect. We are trying to provide a steady risk-weighted return to our investors. And we're trying to be clever in how we can enhance it, right? We use technology to enhance it, and we use our ability to speak directly to a borrower to enhance it. But make no mistake, the key to this is that the value proposition to the borrower is that we have investors that want to give them capital and get that capital back, and they want to give it to them at a fair rate. So by having this motivational alignment from borrower to through to Cannect and then on to the investor, we're able to create an ecosystem where every party, every stakeholder is benefiting.
Actually, Marcus, if I can just jump in here, we actually just got an email question. So I'm going to ask that if you don't mind.
Yeah, sure. Great.
So my husband and I both work in the restaurant industry.
Justin, you work here at Cannect.
My husband and I both work in the restaurant industry, and we don't know where to turn right now. We haven't been working, so obviously no income now, other than CERB. We bought our house in Toronto's Queen Street West area 10 years ago and could barely afford it when we did, but it's probably the best move we ever made. We bought it for $700,000, and we probably owe about $400 on it right now. When we went to our bank when the pandemic started, they offered us a bunch of unsecured debt. We got a line of credit and a credit card, but they didn't do anything with our mortgage. Now we used all the unsecured debt, and our credit is ruined. So what should we do?
Oof. Okay. So I'll tell you, Ian and listeners, this is very common. Okay. So if you're out there, you're listening to the show, and you're like, oh my God, this sounds like a situation I'm in. This is so extremely common. And anecdotally, our studio is in Queen West. So where we're coming to you from is
not
in
too
the
far.
Queen West area of Toronto. Okay. So first off, congratulations on buying that house. Focus on the positive, not the negative. That's what I try to tell my two boys who are celebrating their birthday today, Oscar and Theo, and Nico, who is not celebrating his birthday today. But what we have to drill into here is that this couple did a really great job in buying. They bought a house for $700,000 in the Queen West area. It'd be hard to sell it for less than $2 million right now. Mm-hmm. They owe $400,000, and they went into their bank to look for unsecured. Well, they went into their bank to look for credit, and their bank provided them with unsecured credit. I really don't want to come off in this radio show as being, this sinister, having this sinister viewpoint on banks. But I will say that you have to understand when you go in to ask for something from your bank that they are not motivationally aligned with you, right? Your bank is looking to profit as much as they can from you. Your bank's responsible to their shareholders and their share price, not to how low of a rate they can provide you on your debt. So when you go in with you purchase your house for $700,000, there's absolutely no way it's worth less than 1.5. So let's just say it's a $1.5 million house with a $400,000 mortgage on it. You have to understand that these banks that we deal with on a regular basis, when they register those mortgages, they're very aware of the amount of equity the borrower has. But it is also very easy to cite the stress test as a reason why a mortgage cannot be extended, why a mortgage cannot be increased. And higher cost of capital debt instruments like personal lines of credit and credit cards need to be advanced. And over the course of this pandemic, we have seen more and more Canadians take on more and more unsecured debt. And that is the real problem. So this couple, whoever you are in Queen West, come by and stop by our office / studio at 31 Gladstone for more details. But I will tell you that you're not alone, and that the capital that you took from your bank needs to be repaid. And it needs to be off of your credit bureau, because the longer it sits on your credit rating, the further down it will drag your credit rating. And when you do get a job, because you will get a job, because restaurants are going to open up and hotels are going to open up, and you're going to go back to work. And when you do go back to work, you're going to have income, but you will not have the credit rating because you'll be saddled with this debt. So one of the tools that we have to help at Cannect is to remove that debt from your credit bureau, to pay it off, to register it against your home in second position. And listen, let's think of it like I have to think about each one of these situations as if I was a borrower and an investor, right? That's the kind of key towards what drives Cannect. But like, put yourself in one of our investors' shoes, right? We have a mortgage fund. Do you think our investors would be upset to know that they paid off this couple's, it could be $200,000 worth of unsecured debt, right? We took $200,000 and we paid off this unsecured debt. And now the total amount of debt on this house is $600,000, right? Justin, I think you said there's a $400,000 mortgage. So $400,000 mortgage, $200,000 worth of unsecured debt. And we know this house is probably worth $2 million. People, that's 30% loan to value, right? That is, if you, for just to put this in perspective, the average uninsured loan portfolio of a Canadian bank is in excess of 50% loan to value. So there's absolutely no risk. I would tell whoever wrote that email, I would say, we will price that loan at 5.5% interest with a 1% fee for 3 months. We'll pay off all of that unsecured debt. We'll get that credit score back up to 680, and we'll refinance them with a major bank or a First National or a Merix or like an MCAP, like one of the great non-bank lenders that exist in this market right now, to get them back on track. But
take a break, and when we come back, we will have more, providing the industry's leading direction and customer service that Cannect is known for. My guest this hour, founder and CEO of Cannect, Marcus Zafaris, and principal broker Justin Turner. If you want to find out more, visit cannect.ca, cannect.ca with an A, or give them a shout at 416-766-2666. Ask the Expert continues here on Newstalk 1010. This is Ask the Expert here on Newstalk 1010, 10 minutes before 4 o'clock. I'm Ian Grant. Thanks for joining us. Joining me this hour, founder and CEO of Cannect, Marcus Zafaris, and principal broker Justin Turner. We are talking about Cannect. Guys, a thought crossed my mind during the last segment. I didn't want to pass up the opportunity to point this out, and that I appreciate the way you guys are approaching this, because I think there's a lot of people, I know there's a lot of people, God, I grew up in Scotland for crying out loud, who consider asking for any type of help at all just something that they would never consider. And they probably cut their arm off before they would ask for financial help, especially. And yet this last year and a half, it's not normal. It's not average. It's through no fault of people's own that they're finding themselves in a situation that they can't control. And as you said during the last segment, I mean, they're not alone. There's a lot of people out there. And I think there's a lot of people who need to know and understand that.
Yeah, listen, I think there's there's people that definitely need some help right now, but they don't need as much help as they think they need, right? Like, they have to understand that, and I know it's hard to look at the silver lining and stuff, but at this moment, they've added a ton of value to their real estate. So if they've got some real estate, it's very likely that we can help them to use the real estate to reduce their borrowing costs. We do these weekly podcasts called Make Money Count. They're on our website. And we did one last week on something called WAC. It's a funny term for weighted average cost of capital. And it's a way to measure what you're paying across all of your sources of debt. And a quick and easy way to calculate it, to say, hey, does it make sense for me to do something about this right now? And if you don't know, it's okay. You're meant to not know. Like, people want you to be in the dark. The more that you can take the reins of your finances and of your credit, the better off you're going to be. I mean, we can talk about investments until we're blue in the face, but like, let's not ignore the elephant in the room, right? There's a $500,000 mortgage sitting there. If we can shave 1% off that mortgage every single year, we're going to be $5,000 richer. And that $5,000 is going to be after-tax money. So, Ian, I mean, I don't know where you grew up in Scotland, but like, I'll tell you, buddy, that $5,000 is a lot of money, right?
It certainly is. Yeah, very right about that. 416-872-1010. Let's check in with Joyce. Joyce, good afternoon. What's your question?
Yes, good afternoon.
Sure.
I have a line of credit with one of the banks, and I'm wondering, would that fall under the heading of a mortgage, in the sense of being able to pay it off? Right now it's about $316,370, and I was trying to get out the loan, but the penalty is horrendous.
That's interesting. So, okay, for sure it's a mortgage if there's a penalty on it. You have a $300,000 debt instrument. It's very likely registered against your property. Do you know what bank is it with?
TD.
Okay. So, when you say horrendous, do you want to share with me and
For
Justice?
instance, I was trying to work something out when I was just listening to you, because I did go to the bank, and when I heard that, I said I better give them a call, because the penalty was $8,631.63. The discharge was $400, so that came up to about $9,000 in addition to what I already owe.
Joyce, can you believe that? That's 3% of the debt that you owe.
You said
right?
something similar to this.
Okay, Joyce, first things first, I'm going to tell you, we're going to take care of this, okay? Like, not right now, but I'm going to explain to you how we're going to do it. And then on Monday, someone from my team is going to look after this for you, and you are going to be one of the 5-star Google reviews.
I appreciate that, because when I heard, I said, no, this is me. This is
but I'll give you the quick Coles
I'm in.
notes, okay? This is the quick Coles notes of how this works. Number one, it's not a line of credit. It's a mortgage. And what you're being charged really seems like it's interest rate differential. So interest rate differential, I mean, we're not going to dive too much into it, but really what it is it's a penalty that's ascribed to a fixed rate mortgage that's on a property. And it's a way of the bank saying, we are going to try to recoup from you the difference between the interest rate we gave you on this mortgage and what we believe we can get by lending our money out today in this current market. What the consumer needs to understand is that there are ways to reduce that interest rate differential. For instance, it's a TD mortgage. You got a 20% prepayment privilege. That means that you can pay your mortgage down by 20% tomorrow, and then you can pay your mortgage off entirely the day after. And that will result in an immediate 20% discount on the penalty that you're paying.
Nice.
But there are so many, there's so many more ways that we can discount it. The one thing you got to know is that whoever you're speaking to at the bank, as amazing as they may be, as friendly as they may be, their duty is not to you. It is to their shareholders. It is, so you got to understand, when you walk into the bank to negotiate something like this, they're thinking, I need to make sure I get as much money out of Joyce as possible before she breaks this mortgage. And at Cannect, our job is to make sure that you get sound, unbiased mortgage advice. That's it. So whether you decide to go back and work with your bank or to work with us, doesn't matter. We want to make sure that you're getting the unbiased advice that you need to set up your future.
Tell you what, Joyce, I'm going to put you on hold, and Tony's going to take your name and number, and the guys can follow up. For anyone else who would like to follow up, by the way, Cannect phone number 416-766-2666, 416-766-2666, or Cannect, Cannect.ca is the website. Marcus, as we're wrapping up here, I want to make sure that people understand the vision that we've been talking about over the course of this hour. You're the founder, CEO of the company. What makes Cannect different from other mortgage brokerages?
Ian, we're all in. Like, we are all in on the customer. We have spent, I didn't want to tell you, we spent millions of dollars on technology to make sure that when you come to our website, you can enter in your address and you can get every piece of information you need. Arm yourself with information is the one thing I can tell the consumer. But we're all in. We're all in to look after the consumer. 20 years in this business tells me one thing. You look after the consumer, everything else will follow suit.
I'm up against the wall here. Thank you guys so much. I really appreciate this hour. Very, very informative.
Thanks, Ian.
Thanks, Ian.
And my guest this hour, Marcus Averis, principal broker, Justin Turner. Also, thanks to Matthew Scanlon for this hour. And oh, by the way, happy birthday, Oscar, Theo, and Nico. Yours is coming up. This has been Ask the Expert here on Newstalk 1010. To find out more about Cannect, check out their website, Cannect, Cannect.ca, or you can give them a call, 416-766-2666. I'm Ian Grant. This is Ask the Expert on Newstalk